Welcome to a special edition of Owner to Owner podcast, this time in partnership with Fresh Leadership. We today are going to be talking to the owners of Elite Mechanical, which is a local HVAC construction fabrication company on Oahu. Did I describe that correctly? Yep. Nice. And how long has Elite Mechanical been around?
Opened in June of 1995.
95. Okay.
I say 30 years, but it's short, just short of 30.
Just short. Nice. So, Tom, we're going to be talking with you about the process of building the business, scaling the business, and ultimately your decision to sell the business. And then Quan, we're going to be talking to you as an investor who decided to acquire Elite Mechanical and that process. And then Craig, just speaking with you about working with Tom over the years through that scaling, through the building of the business, and then also working with Tom and Quan through this acquisition. So Tom, I'll start with you. Tell me a little bit about, I think one of the things I'm curious about when I talk to entrepreneurs and business owners is, did you start wanting to be a businessman, a business owner, or were you interested in construction, fabrication specifically, or was it a bit of both?
Actually, I went to the University of Hawaii in the School of Travel Industry Management. I wanted to be a hotelier.
Oh, okay.
In the process of working in hotels, I was involved in a lot of construction. In fact, I was in charge of capital improvements for several hotels.
Okay.
And so that's my introduction to construction as well.
So you were going to just be in the tourism industry, and then through the process of working at the hotel, you just became interested.
Well, what happened was at my few years at Pacific Beach Hotel, the owner of the hotel, H.T. Hayashi, older Japanese, first generation in Hawaii. Not too educated, but a lot of guts.
Okay.
And he started his own construction company, and he just took a lot of risk, opened up hotel corporation, and Pacific Beach Hotel was his jewel, so to speak.
Okay.
And working for him opened my eyes to a lot of opportunities.
Right, you're sort of seeing the needs of the hotel.
Not so much the needs of the hotel, but to see a guy that didn't have anything to start with build an empire. And I remember the last day that I said my goodbyes. Yeah. And I said, HT, I just want to see if I can do what you did. And as tough as a cookie as he was, we both shed tears, because we got kind of close.
So that was kind of the start of this idea that you had to own your own thing, be your own boss, probably, right?
Yes,
that's part of it. So then you start Elite Mechanical in 1995 with partners.
What happened was, through my experience with capital improvement projects, I got involved with several different contractors, and they approached me to be part of this Elite Mechanical startup. And I told everybody, I don't have HVAC experience.
Right.
And I was told that I would be running the admin of the company. And so I jumped into the game. So
what was the hardest thing about starting?
Well, when we first started, there were 6 of us. 6 gentlemen, several already in the construction business.
Yeah.
And very hard-headed guys.
Okay.
So I tell you, it wasn't a marriage made in heaven initially. So that it was a rocky start, but it was good guys to start up with, at least, because they had the business background.
Right. So you start. How did you kind of find a unique place in the market as a company initially? That's probably the hardest thing to do when you're starting off, right?
Yeah, exactly. We had no reputation. The people that we were able to acquire initially had no experience. I think it was just luck and the grace of God that carried us through the initial period, because we had no idea what we were doing initially.
Sure.
Right.
Sure, makes sense. And then as you did start to make some income and revenue, probably a lot of connections were involved, right? People that you knew. I'm always curious, scaling a company, right? Getting bigger, you have to hire more people often. Maybe you have to pay for more space. But what were the hardest parts for your company, for Elite Mechanical, when it came to scaling and getting bigger?
Well, again, like I said, with my past background in the hotel industry,
Yeah.
I wasn't really familiar with the process of construction. Getting to know that first, building the company, and especially taking the risks. As a manager in hotels, there was no risk. I did my job. I was a salary guy. But the risk that we first started off was pretty big risks. And that was, a very eye-opening experience, I think,
Yeah. Yeah. At some point, did you see that your bottom line was being affected?
Well, what happened was back in 2008, when things started rolling along, we were doing
Yeah.
fairly well. Decision was, at that time we were doing air conditioning and sheet metal work,
Yeah.
and then we had some contacts in the other mechanical practices, which was fire sprinkling and plumbing. Because we thought we knew what we were doing, we said, well, why don't we open those in terms of upscaling?
Yep. New market.
New market, but there was no plan. We just said, let's chance it and start it up.
Yeah.
And without the plan in hand, in short of 2 years, we fell $2 million in debt. We owed everybody in the state money. We owed the state money,
I assume you don't anymore, otherwise you wouldn't be talking about it right now.
No, and I mentioned about the grace of God.
There you go.
$2 million in debt.
Yeah.
Hardly anybody wanted to work with us because we owed them money.
Right.
But we put our nose to the grindstone, able to find some way to get out of it.
Yeah.
And in short of 2 years, we got out of the red, and we were able to pay everybody what they were owed.
Sure.
So we didn't leave anybody hanging. A couple years after that, it's like we got out of the red, doing okay, just surviving, but we got to do something different. And that's when I just by chance, by luck, I met Craig.
But why did you have to do something different? Just because you didn't want to repeat that mistake?
Yeah, again, just starting a big venture like that without a plan. And thinking that we knew everything.
Yeah.
Craig coming in as a consultant had an outside perspective, especially with some different facets of business platforms that we eventually adopted.
Right. So Craig, when you came in, so this is 2010, 2011, somewhere around there?
A little bit later, 15, 16.
Okay. So 15, 16, you come in, Tom approaches you, and what's the first thing that you sort of identified?
Well, there were 3 owners, all equal owners, and 2 of them kind of were moving towards retirement, right? And then Tom was, believe it or not, he was the youngest guy there. And they were trying to figure out how do they get out of the company as far as sell the company, because basically they were actually floating the company from a liability standpoint, and they kind of wanted to de-risk, and one wanted to retire, the other wasn't, had health issues. And then Tom's like, hey, we gotta find new leaders. So we initially worked with their up and coming leaders that they thought could potentially buy the company from them. And that really led into us having conversations about what are the right qualities and characteristics of what's needed,
So when you came in, you were both already sort of thinking about what's my exit strategy, right?
Yes.
Okay, so was that part of the conversation when you first
Well, not
approached
so
Craig?
much that yet in terms of concession.
Yeah.
But keep in mind, we almost closed. We almost went bankrupt.
Right.
We had to survive, and we had to have a plan for survival.
Right.
And that's when we initially got together with Craig. And then it took a different tangent in terms of, okay, well, who's the future of Elite?
Yeah.
And that's when we started doing the succession as well.
So it sounds like 2 different efforts, right? One is a succession exit strategy, and one is how do I make this business healthier? What if you could identify one thing that you needed to do that you felt would make the business healthier in the short term? What was that at that time?
At that, going back, that far back, we didn't have a platform. Heck, we didn't have a budget a lot of times, and that's where I'm saying we needed a process. And what Craig introduced us to was the EOS process, Entrepreneur Operating Systems. And that opened our eyes in terms of a process that everybody could follow, not just executive staff.
Do you have like a story or an example where after you started using the process and working with Craig, is there a moment you can remember that you went, wow, this is actually working?
Actually, it was when we brought in another executive from another company, one of the larger HVAC company, way larger than we are. And when he came into a company and he was kind of fresh into the EOS, the first experience for him was, wow, this is neat. Like that big, large HVAC company did not have a platform. It was to do whatever they came across the desk that day.
So this bigger company than you, their leadership shows up and goes, whatever your process is, your organizational technique, the EOS system, I wish we had this. And that's when you knew you were onto something.
Exactly. And not only for that one person, but some other executive staff also.
Yeah, that they hired in, right?
Yeah.
Yeah.
All these guys coming fresh
Yeah.
and seeing this process in action opened their eyes. Really opened their eyes.
So from when you came in and identified some of the improvements that needed to be made, you helped Tom implement this
Yeah.
EOS process. What did you see initially? What was the first changes that you saw?
Well, initially they just needed, they didn't have anything, right? So we actually started with another process, and then EOS was kind of the second thing that we did. So we were actually doing strategic planning, operating, very similar, but it didn't quite have the structure. It was designed kind of for larger corporate organizations. So it wasn't quite fitting. We were doing some, but it wasn't actually getting a whole lot of traction. So I said, Tom, I read this book and I'm going to do this, but I'm going to shift you over. And he's like, hey, Craig, we did all of this and now you want us to change. I'm like,
read these 10 books.
Yeah, no, not 10 books, but I mean, so you got to trust me. And you gotta trust that this might actually be more helpful, and kind of begrudgingly the team. I mean, they're all contractors, so they're like, Craig, we don't read. I mean, contractors, we don't read.
Were the audiobooks available?
Yeah, audiobooks. That's what they did, most of them, right?
Yeah.
And they read them, and we started that, and then we just came back quarter after quarter, month after month, and year after year, and just refined it one piece at a time, right? Mm-hmm. And succession was always part of the conversation, but it's also going, how do you build new business? Actually, the first thing when we came in was they actually were surviving without a controller. And we just said, hey, if we're gonna get the company healthy from a financial standpoint, you gotta have good books. Mm-hmm. So that's when they found one of their CFO today. And that was a huge thing because he actually brought clear accountability for the numbers, cleaned up the books, and was actually, when the books are clean, then you can actually do a sale. If the books are not steady over multiple years, you got nothing.
So I think not having a controller is something that a lot of medium, even large size companies deal with.
Good enough, right?
Yeah, bookkeeper.
Yeah.
Right. So when you bookkeeper. When you brought in the controller, what was within how many months did you see an effect? Was it the next calendar year you saw immediately? Next fiscal year?
Exactly. Well, it's hard to pinpoint an exact time frame, but he came in with a lot of background. He came with some construction as well. Mm-hmm. So he got moving really quick into the process.
But also we really started focusing in on like accounts receivables, mm-hmm. and making sure that we're actually having the conversations with our strategic partners that owed us like big dollars. I remember one time, right, we were like, hey, we actually have to talk to one of our strategic partners about getting paid on time. And they had no idea. And we said, you guys need to go to the top and you need to have that conversation, because the people that are trying to bill, it just go back and forth for months. And then it's like hundreds and hundreds of thousands of dollars in accounts receivables. And they did that, and within, a month, they got a big check, and they're like, wow, we can breathe again.
Did you know any of this?
That was a big one, right?
So the EOS system, which you're implementing, which you implemented for Elite Mechanical, there are a lot of things that you identified. What is the process with the EOS system for initially identifying the issues within the company that you want to address, just so other people out there who are in a similar situation can understand that process.
Yeah, so I think in EOS, the key things we do is what is vision, traction, healthy. So part of when we started with them, we were really working on the health, actually having healthy communication because it wasn't that good. And then it's going, where are they going? What does that look like from a 10-year perspective down to a 3? What is the 1 and then into the quarter?
What does healthy communication look like?
Healthy communication means they understand each other from a psychometric standpoint. So how does your interpersonal skills work and how do you not piss each other off using...
And this is from leadership all the way down through the employees?
Primarily just the top tier of leadership.
Mostly leadership. Okay.
Mostly leadership, and then they would manage down into the employees, right? But we primarily work with, if leadership can't communicate really clearly, then we have to give them tools. So we would use assessments and we would run through kind of different workshops, like 5 dysfunctions of a team, and talk about what are the things about building trust, having healthy conflict, being on the same page, accountability.
So you're really changing the whole culture
Yep.
of the company
Yeah.
through communication first.
Yeah. Yeah.
Keep in mind, in construction,
Yeah.
we don't do stuff like that.
Yeah.
Get the job, do the job,
Yeah.
go. You know?
I worked on, so I went to film school, right? But I ended up, my first jobs out of film school here in Hawaii were on Lost, right? The TV show Lost and Hawaii Five-0. But I wasn't initially in the production department. I was in the accounting department. Not only the accounting department, I was the construction auditor. So I worked around those guys for 2-3 years straight, and yeah, you know, awesome guys. Communication is not necessarily their strong suit. So.
Yeah.
Continue. So
Yeah.
you're identifying communication.
Yeah.
What's the second kind of thing that you're looking at?
Well, part of it, you know, kind of what we were just talking about, is most people in construction are technically good.
Yeah.
But then you have to build the people skills in, which Tom is, you know, he comes from hospitality. So that value set in a construction company is not probably normal,
Sure.
right? So he brought that and then valued that. So we did a lot of that kind of thing. And then it's, where is the company going? So it's going, hey, we've had this past, literally we're almost in bankruptcy, right? But they actually did the hard work and got healthy again. But now it's going, what's the trajectory of growth for the company? And that's really, what is your plan, or what we call a vision traction organizer, a VTO.
And is that where you started to discover that succession was a big priority?
Yeah, well, in that, if you're going to do that, you end up building out what we call a supersized org chart or an accountability chart. And then you're going, who are the actual people that you need to fit in the right seat to actually be able to elevate out of the business, or so that they could just be owners rather than managers, because they were managers as well as owners. And when they're talking, when the 3 partners are all owners, you don't know what hat they're wearing. So immediately we would have owners meetings, talk about ownership kinds of issues versus, okay, managers, here's how you guys operating. You're not all equals, right? And then how does that work? And it pretty halfway worked, but we had to work through a lot of that, right? It's not that clear, because if one of the owners, even though he's in a lower manager level, like Tom was integrating all of them, if they didn't like it, it didn't go, right? So it's just kind of, it's how do you manage some of these nuances?
And that kind of goes back to the communication too.
Yeah.
Right?
And just remember, it was 3 Japanese men, so it's like 3 samurais that want to do it their way, and it takes time to kind of get there. It doesn't happen overnight.
Right.
Yeah.
How did you? So we've talked about how you saw the effect on the bottom line, hiring a controller, improving the culture of communication. How did that affect your kind of work-life balance, or your ability to not let the business run you, right? You were running the business. Did that make things less stressful for you? And
Oh yeah, definitely. Again, coming out of bankruptcy, without a clear sight of where we're going, right? That helped to clear it up.
bankruptcy is pretty stressful.
Yeah, it's pretty stressful, right? Again, the concept of this is to develop a plan, and it's not just my plan; it's everyone's plan, based on their their duties, their responsibilities, you know. And it's like I said, it's a group effort, not just one person. And before everything be in my head, you know. And that gets kind of stressed too, right? You know.
That's part of the communication too, right? Getting everything down. Did you guys create, were there handbooks or documents for the company that were part of?
There were handbooks,
Yeah.
but more so for reference sake. There wasn't any guidebook, so to speak.
Right.
You know, this was a guidebook that not only executives could follow, but also department heads and their staff as well. You know.
So it sounds like it made everything less stressful, not just for the owners of the company, but for everyone who worked.
Well, especially when you know the everybody in the company knows that we have a vision that if Owen and Tom retires, what's going to happen? You know, what's the future look if Owen and Tom's not involved? And people were asking. You know, we're getting a little bit older. A third partner passed away. So you know, what is the future? And that's the whole thing about the Vision Traction Organizer. It's showing the future, a plan for the future.
I never really considered that, how much it impacts employees
Oh,
to
definitely.
understand what the succession plan is if they don't plan on going anywhere. If they want to work at this organization for their entire career, they want to know what the plan is
Exactly.
moving
Yeah.
forward.
Yeah, what's the opportunity for me? Because if there's no vision for it, it's like, why am I spending time here in this company? And there's a lot of companies that have no vision, right? And then the second part is really, how do you actually implement it? Traction, and actually, how do you bring it down on the ground so that everybody's moving according to that vision? It's not exact, it's never perfect, right? But that levels of communication get aligned so that it flows and cascades through the organization. So that the whole thing, it's rather than arrows going all over the place, they're all pointing in the same direction. It's like rowing a canoe boat in one direction versus 5 different directions. And when you do that, it just gets easier, and there's a lot more synergy, and then it's less effort, less wasted effort. Most companies are going 5 different directions, but until the direction is set and it's put in paper, and then people are held to those things, and especially a part of it is really, are they held to the right values, right? So what are the values that we value here, and how does that show up behaviorally? And we've taught them ways that their own managers evaluate each of their people. And if they're not the right people, this is not the boat for you. So we want all of the right people. It means they fit all the core values and they're in the right seat where they get it, want it, and have the capacity to do it. When they do that, then you got the right person in the right seat. Or as Jim Collins, the right people on the bus and in the right seat, and then that adds to a huge amount of efficiency. So,
How big of a deal is having the right people in the right seat?
Well, as we were talking about it earlier,
Right.
the biggest problem that a business person has a lot of times is people, right? If you have the bad people, or if you have people that don't get along with people, let alone their own staff members, it'll throw the company askew. You know, it'll just it doesn't flow at that point. You know.
Yeah. Is there an example either of you can think of a person, we can obviously keep it anonymous, who, you know, it was just not the right fit? And how did this system immediately change that issue?
can think of lots, yeah.
Yeah, without mentioning names.
Yeah, right off, right? Yeah, one of his key managers,
Exactly,
right?
exactly.
They realized he was supposed to be doing this really large job within pulling the company together, and realized that he didn't actually have the ability to do it. And then he actually resigned within a couple months, right?
Mm-hmm.
But he had all the degrees, all the pedigree, and all this stuff, but he just couldn't do it. And
But see, what I think is interesting is you had identified, or some of your managers had identified at some point already, that this guy was not the right person, right? But somehow the EOS system and kind of readdressing the cultural issues at the company helped you make a decision to put him in a place where he was forced to resign, or where I'm just trying to figure out how does the EOS system allow there to be kind of solutions to these people problems that you had already identified as problems earlier? But why does the EOS system give you a solution for them? Does that make sense?
Yeah, well, outside of the US, I think what Craig does masterfully is a Briggs-Myers assessment. Berkman, I'm sorry. Yeah, we've done so many with Craig.
So everybody at the company takes a personality test.
Pretty much, right.
Got
And
it.
then, you know, when you see somebody way off the scale, and that's way off means it's bad. you know. And that person sees that. I think he's going like, "Whoa, something's wrong with me, maybe." You know.
Interesting.
And that's what happened on that.
Really? So they took a personality test, and then it started getting them thinking, maybe I'm not in the right place.
I think so. And you know, when somebody's not really with the flow, it's so easy for that person to realize that, especially if they're intelligent. And this guy's intelligent, you know.
Right.
You know,
Right.
and nobody's perfect, but it just wasn't made to be.
Yeah.
So a lot less conflict in doing it that way too. Right?
Well, I think like the people side, it's sort of like, it's your biggest, expense every month, right? But also if as you're thinking about it, it's also your biggest investment, and it's going. Everybody knows where the people. What we do is we actually have conversations about each individual and what is the best either corrective. Either we're gonna coach them and they're gonna grow them, and we have huge success stories of people that they have the raw talent, but they just headed in the right direction, and then with the right coaching and the right focus, they turn out to be star players, right? We have other people that are like they're going in the wrong direction and they actually are not open to coaching, and then they actually either exit on their own or we help them exit. Right, but that's really from management standpoint. We create space for them to talk openly and to kind of look at where are we going and how do we actually see all the bottom line results and be able to really move towards that, and not just going, well, they're doing this, but here's the results say otherwise, right? They're negative results, but how do we actually align the two and get them in unison? And that's really what's been, but it's like a consistent thing of it's the managers continuing to keep pushing down and and it's not just one quarter, it's quarter after quarter, year after year that you have to keep doing it to get it fully aligned,
So having you as a coach, an executive leadership coach in this situation, yeah, sure, we're using the EOS system, but you're the one who's implementing it.
Yeah.
How powerful was it to have him constantly checking in, right? Because I would imagine when it comes to a coach of anything, right, the value of the coach is that there's some accountability there, right? There's some checking in. How valuable was that for you?
Well, invaluable. And again, the EOS system is not rocket science principles. It really isn't, okay? But the way it's put together, it makes a whole lot of sense. But it's not easy to implement.
Sure.
It took us 2 years to actually really roll, and if we try to do it ourselves, it's not going to happen. Somebody like Craig would come in and into our meetings and say, "Oh, maybe you should look at this. You should look at that."
Yeah.
And especially with Craig's forte with our executive team's quarterly and annual meetings, which kind of resets the whole calendar for the company. Actually,
Yeah.
we cannot do it ourselves. We just need somebody with a coaching ability like Craig.
Makes a lot of sense.
Yeah.
Quan, you've been sitting over there really quiet this whole time.
Soaking it in.
Yeah. When you, from the outside looking in, when you first became aware of Elite Mechanical and their succession plan, I don't know how you all became aware of each other, right? But as an investor, coming into a company, looking at whatever qualifications you normally look at as an investor to figure out the viability of an acquisition, right? What did you see immediately from Elite Mechanical that made you interested?
So prior to encountering Elite, I was exposed to the concept of EOS. I've heard through a couple of podcasts focusing on small business, heard of this concept. It's like, okay, seems highly talked about. Got this book, I think it was Traction, so I had to buy my first book. Read through it, it's like, well, okay, on
Craig
paper.
gave me one for free.
Yeah, see, I didn't know
win.
Craig that.
I
so
bought my
that's-
own too. Okay.
But went through the book, is like, wow, this thing makes a lot of sense. Right? On paper, makes a lot of sense. So the thinking was, one day, when we do acquire a company, we would try to get the company on something like
Interesting.
EOS. Although at that point in time, I've not actually seen any action. It was all theoretical.
Right.
So when we encountered Elite and got to know Elite and found out that it is already operating on EOS, that almost was like the first signal, where's the dotted line, where do I sign, right?
Interesting.
But as we got to know the company further and further, as we continue with our due diligence process and got to meet Craig and start to see the EOS actually work in real life, it just, every step of the way was a confirmation that this is, this is important, this is amazing, this is going to just elevate, right, the company amongst its peers, right? So that was kind of my experience.
As they're talking about the implementation of the EOS system in the years before you became interested, can you sort of, when you were first being introduced to the company, can you sort of see how all of those implementations were kind of bearing fruit at that time?
Yeah, I mean, the first thought that come to mind is, thanks for going through all the hard work getting it implemented.
Made things easier for you. Huh?
Yeah, just paved the way for me. Forever grateful for that. But I think to some of the points that were discussed here, on the people front, for example, right? To me, it's just it's a very objective framework where anyone with average intelligence in that framework can spot for themselves, do I fit or do I not fit? Right? And it takes away the I don't think you fit, or so and so don't think you fit, into something that's very objective. And it helps the person that does not fit to identify for themselves, maybe I ought to think about doing this, and put them on a better path, right? So yeah, I think it's
good for everyone in
It's
that
good for
context,
everyone. It's
right?
really creating a win-win-win situation.
Because as an employee or a manager or whatever position, you can stay at a company for far too long. And that may not be good for the company if you're in the wrong seat, but it's also not good for the person who's in the wrong seat, right? I mean, at some point they're wasting their time, they're wasting their career, when they could maybe fit at a company better, in a better seat.
Exactly. We all think we're doing them a favor by dragging out the inevitable, but it's not fair to them. Right?
Right.
Yeah.
That makes a lot of sense. In your background, you have a lot of investment experience and business management experience, but it seems like your focus has always been the people and kind of maximizing people's potential. How do you feel like you've answered this question a little bit, but how do you feel like you've seen the EOS system maximize the potential of all the people in the organization beyond what we've talked about, right seat and all that sort of thing?
Yeah, and I always have this discussion with some of my investment friends, right, where I think in the investment world, sometimes you can look at assets, tangible assets as something that's concrete, you can feel, you can touch, how it's very predictable. If you have a piece of land, that you can rent that out, or you have a home, you can rent that out, you can collect rent. I mean, it's a very tangible asset. But business, on the other hand, there could be nothing, right? It's just a group of people. But what that group of people can come together and accomplish is there's no limit to that. Right. So the debate I always have with my investment friends is that I much rather invest my time into perfecting or better understand how you can get a group of people to come together and accomplish things, rather than spot the next best piece of real estate or the next financial asset. And so that was one angle that it kind of just kind of reflects how I kind of think about these kind of things. But I think in terms of EOS, it's like it's such a clear construct, simple to understand, difficult to implement, right? But it's simple to understand and grasp, and that really gets everyone quickly looking in the same direction, right? So I think that is just, from an investment standpoint, the quicker you can get to that, the quicker you can start marching and reaching towards your goals, right?
So EOS and what Craig are doing are almost like a shortcut to get all of your people
Exactly.
on the same page.
Exactly.
That's really cool.
Well, let me interject with one comment.
Okay, yeah.
When Quan and his team first came in, and maybe knowing some things about US and parts of the people and staff, surprised the heck out of me. For his first 2 weeks in the company, he met with every single employee, either in the office or on the job site, like on the field. He would go out on the field, talk to each and every one of our staff. And I said, wow,
This guy's thorough.
yeah, I said,
Yeah.
I never did that. And I think at that point, people bought into Quan and what he's trying to do for the company. I think it was magical. I said that to you.
Yeah,
I think that was
thank
magical,
you.
We've been discussing that kind of the passing the baton of ownership has been kind of really a match made in heaven. I've not seen one that it's flowed as well as it has.
Exactly.
Really.
Yeah, and even them, I kind of describe kind of like it's like a 20-something-year-old company, right, and almost 30 years old. But it's sort of like we basically rebuilt the engine of this thing, and now all the fundamentals are there. And now when they acquire as an acquiree, as a new owner, it's like now they can just supercharge it, or they can take it to the next level, right? Because all the fundamentals are there, right?
In fact, we used a business broker out of San Diego to help us sell the company. And in my first initial meeting with him, I said, 5 years ago, before we were on EOS, before Craig, like say, closer to 10, we weren't ready. We were messed up. We're a messed up company.
Some red flags probably.
But again, I think we got our foot firmly on the ground. We built a foundation, a business platform using Craig and using Craig as our coach, made us sellable. And I think that was crucial, very crucial for us.
Yeah.
During the process, this acquisition process, which is still ongoing now, right? I mean,
It's all done.
oh, it's done.
It's done.
Congratulations.
He's the new owner.
Thank you.
Congratulations. So during that process, were there any pitfalls that, because of Craig's experience and the EOS system, that he was able to kind of walk you through? As much as you may like each other, there's always little things, right?
I wouldn't say there are any pitfalls. It wasn't flawless. There are some things that we had to, really, hey, we got to do this now.
Sure. But there was nothing that popped up that was like, this is a problem.
No, not really. I can't.
I mean, there's a lot of parties that are involved that we
Oh,
gotta
yeah.
get everyone on the table.
So
right?
it's more of the other people.
So yeah,
Yeah, we told their CFO that he needed to hire more help. He's like, nah, I got it. And then afterwards, he's like, yeah, I should have listened. Right?
But I think one thing to point out is, Tom was very transparent throughout this entire process, and I'm forever grateful. And one of the things that was part of the transparency was introducing us, to Craig, and this is before the sale happened. Right? We sat down and we went through the Berkman and really start to discuss how we're going to the new owners will fit in. Is there a good?
You
fit?
went through what? I'm sorry.
The Berkman assessment.
Oh, got
As
it.
well as
Yeah.
we
It's
looked
one of the
at,
assessments.
we also looked at another one, Working Genius, how they thought, where they fit, and then we talked about different roles and responsibilities, and how do you pass the baton, where would they like to be, what are possibilities. So we were able to give them a lot of transparency to.
So I think another important point about what you're doing for Elite Mechanical and other companies is it's not a one-size-fits-all approach. Just because you're using the EOS system, you're bringing in unique assessments and approaches that fit the company and the people and the culture that you're working with. Is that correct?
Yeah.
Yeah.
And one of the, I think part of the overall thing is, you know, as we're going through that process, actually, even before, one of the ways that we knew that the company is actually ready to sell was along the way that I've worked with them. One of the partners that I got very close with, actually, he passed away from cancer, Pat, and then it was Tom and Owen, and then Owen's actually, how old is Owen now?
Pushing 80.
Pushing 80, right? So Owen's kind of slowing down, ready to retire, and then Tom actually had personal crisis in his family where he had to actually step out of the business and take care of family, right? And so what happened was each time that, especially when Pat died, it was lockstep. We actually had somebody right below him that has huge potential, who's basically running a huge division in our company. And then and Owen kind of is there, but not transitioning, you know, been transitioning for many years, and there's somebody else that stepped up there. And then even when Tom had to step out, you know, they all just kind of, it was already there. And the fundamental thing is when you actually sell a company, the owners need to move into the owner's box and not actually be involved with management. And they actually did that. And because the system was in place, it wasn't a huge disruption. Everything was like just one step, one step, one step, one step. So it just kind of going click, click, click. And there was no business discontinuity, even on the transition of their ownership. Everything just moved just really smoothly. But because all of the pieces are there, or all of the parts of the engine were solid, there wasn't something that was going to break down, right?
And because
we knew exactly how to replace that part, and we had like spare parts.
And because everybody was so honest with each other,
Yeah.
right? Talk about transparency so
Yeah.
much. I would imagine that's more than half the battle of
Yeah.
any acquisition that you do, right? It's
Yeah.
just, is everybody being honest about
Yeah.
Right.
what's happening here?
Yeah, but that's also the values that, you know, the company has, as the ownership had. But even for us, it's you know, open and honest, vulnerability-based trust was like drilled in, rather than kind of don't say and smoke and mirrors.
It
there's
goes
none
back
of
to the
that.
culture and the
Yeah.
communication
Yeah.
that EOS and you are implementing.
Yeah,
right?
yeah,
If that culture is not implemented, then
Yeah.
maybe Tom's honest, but somebody else that's in the
Yeah.
conversation isn't, right? But you've already sort of weeded out a lot of those factors before the succession plan is put in place.
yeah,
It makes a lot of sense.
yeah.
It's really interesting. I'm curious, Quan, just in general, for people who are kind of watching and listening, as an investor in companies, what are the things you look for? Do you have a top three of when you go in, like, here's 3 red flags, or here's 3 green flags, or like what do you look for?
There are certain things that we were looking for as we got on this path. And I wouldn't say those are necessarily universal, right? Because, for example, you know, we were looking strictly for something where we can add value to, right? And given our background and our comfort zone, you know, we thought where we can add value best is retiring owners that need that outside succession plan, where the owner really cares about the people of the company, where there's a strong culture, where there's the desire to continue and do good, right? And that's not, you know, if you ask any other investor, they might have a complete different list. But if maybe speaking a little bit more generically, is that it's always desirable to have clear, clean financials. And ideally,
A controller.
Yeah, ideally a controller, ideally stable financials, but you know, we know business in real world fluctuate, but at least clean and clear is important. And the way the business operates, right? The cleaner, the clearer that is, the better, the more favorable a business will be looked at, right? You know, there are things that's beyond, you know, scope of one's control, like industry and all of those things. But I think internally, say, the system and the numbers are going to be looked at by anyone, every investor.
Sure. So that's, I mean, that makes sense. You're investing. The nature of the word means that you care about the financial health of the company, right?
Exactly.
And then what's just below that? What's the next thing universally you look at?
Well, universally, well, actually, I think, maybe another way of looking at it, in reality, right? The top down is really going to be more sector, it's usually more macro, right? What kind of sector is the business operating in? Does that make the revenue and the profitability of that business more cyclical or not, right? So usually that you're starting with the macro, because that determines how this investment is going to fit into your broader portfolio, right? Wherever you're investing from.
I see.
But I think you haven't gone through the macro, and then looking further, the financials process and people. Like, actually, I should probably say people might be.
That's where I was going. Yeah, I thought that was going to be the answer.
Yeah, but we talk so much about people. I thought we just give other factors a chance. But absolutely people. Right?
Yeah.
People is going to be huge.
Yeah. What are some of the other factors just that maybe we haven't discussed that you're looking at as an investor?
I think, just from top of mind, I think really those are, the macros and the internals, I think really are, the financials,
the biggest
people and
things.
process. Yeah.
Final,
I think,
yeah.
And then the rest are going to be more specific to each individual investor, right?
Right.
Yeah. One will not look at the same way as another. For example, growth potential. Let's just take that for example. Yeah. Obviously, most investors make investments to see the company grow.
Right.
But what is the definition of the growth potential? For example, we weren't looking for something that will have double-digit growth for that's going to sustain to the future, right? That will be for a different type of investor. We're looking for something that's sustainable, but it's going to be a stable growth, right? So that's an example of something that's a little bit more bespoke.
But either way, you have to have that foundation.
Exactly.
Culturally, financially, and people-wise.
Right.
To be able to either grow, or remain stable. Either way, you have to have a healthy foundation.
Yeah, exactly. There's one thing that comes to mind is when we think investing, automatically we think it's a practice within the broader finance trade, if you will, right? It falls under the finance umbrella, so therefore it's all about numbers.
Right.
But in reality, it's the finance, the number part is just a scorecard, right, of everything else that's really more qualitative.
Right. It's the result, right?
Exactly.
If you see a healthy financial number, that usually means that there's a healthy
The
culture.
people, the process, the culture, and all of the other qualitative stuff are done right.
Yeah.
Number is just a scorecard.
I'm just really happy for Tom, just being able to kind of, what's this next season of life, and even on a personal level, we did, a year ago, he's like, hey, my life is totally changed, and if we sell this company, what am I gonna do? So
I'm still going through that.
Yeah. But even for him on a personal level, he says, I wanna hire you to do a life plan for me, which is what we do for individuals. And we sat here and put up 20 sheets of poster paper on the wall and basically talked about what's the next strategic steps. If this happens, then what do we do?
We wouldn't be able to, sell the company at this point already if we weren't as strong as we are because of the principles,
And one of the things you were just mentioning to me, Tom, is that when you initially started the process of trying to sell the company, there were 6 factors that, who were you talking to that told you these 6 factors?
My broker.
Okay, so you're talking to your broker. You're like, I want a succession plan. I want to sell my company. And your broker is like, there's these 6 factors that you need to address and look at before you begin this process of selling your company.
Exactly.
Where else did you see those 6 factors appear?
In Craig's EOS format. The 6, or maybe more, Craig.
The 6 main things?
Yeah.
So vision, people, data, how do you solve issues, your process,
Marketing,
and then,
right?
Yeah.
And these are the ones that he focuses on upon upon his introduction presentations, you know. And again, the broker brought this up in a workshop. And when I saw it in his workbook, I was like, oh, we're there. You know, we're there.
Yeah, you guys have done all the hard work,
Yeah,
right?
yeah.
Otherwise, it'd be like you have to redo it. Even harder work to sell.
Yeah, exactly.
So Tom, why would you recommend Craig and the EOS system for other companies out there?
Something that resonated with me when, and I'm not sure if you picked it up, when he said, our company, you know. Craig is not just a consultant, you know. He knows our company inside and out, you know. And he, the points that he brings up, the improvements, suggestions, it says, if it's his company, I mean, that he just said it, our company. And every so often you come with that, Craig. And that hits me right here because I said, you know, and already we're very close personally as well, you know. But business and professionally, when somebody takes ownership in the company that he's trying to help, I said it just speaks volumes, you know. I have had Craig make presentations to our associations. There was a lot of interest, you know. But in terms of the HVAC industry, why we're the only ones on a business platform, EOS, you know. I tried to share the aloha, you know, but there was a lot of interest, but nobody really wanted to take a dive, you know, and just eat it, you know. And I think that's, if anything, for us at Elite, you know, we don't shy away from just chancing them, you know, and just take a gamble. You know, when we first started, I didn't know Craig, but I think immediately after I said to myself, you know what, I think I can trust this guy. You know, and that's my major point with Craig. You know.
Were you right?
I'm sorry.
Were you right that you can trust him?
I'm out of the company, so I don't care now. You know.
I'll throw the same question to you. Why would you recommend Craig and the EOS system to other companies out there?
I think a bottom line in 7 words. It increases the value of your company. You know, earlier we talked about investment criteria and all of that. And the bottom line is, regardless of what type of investors looking at a company, there is a value to it. And the EOS system, I truly believe, it increases the value of a company that implements it.
Can I also add something to that?
Yeah.
In our marketing video, it was a large portion of it was based on EOS. Our broker, seeing that, has really accepted that notion and is getting into EOS in San Diego also, because he's seen the value in working with us. It might not be working with Craig, but you know, a lot of people self-implement, you know, and Craig will, you know, a lot of his clients were self-implementers, but it's tough. You need a professional, you know, you need somebody dedicated to the process, right? You know.
It's a whole market for you, the self-implementers of the EOS system.
Yeah, so like Bob, who was just here,
Yeah.
he's self-implemented, but he came out of another company that I had implemented it with. So he knows enough, but there's even more opportunity there.
That's like the easiest sell for you, though.
Yeah. But oftentimes they think, well, we're doing it all, but it's sort of like if you get a software off the shelf and you're just trying to learn it on your own, you're not going to know how to use it, especially when it gets difficult.
Yeah.
Right. So that's really where, when it's pretty cut and dry, it's really easy. But if you have to traverse difficult conversations and different political realities within an organization, or like especially in Hawaii, which is very passive aggressive, it's not as easy as it looks. On the surface, it looks really easy, but I've had people that have self-implemented and then they lose 50% of their staff, and then they go, yeah, they had to go anyway. And it's like, yeah, but not like that, you know. And even with Elite, you know, we actually worked kind of one person at a time, you know, getting the right person in the right seat, or maybe they needed to exit. But it was really one at a time. So it's very, it's kind of pruning rather than taking a chainsaw and cutting the whole thing off. So, I mean, it's kind of like how Tom's a gardener, but it's really like the bonsai gardening. You're not just lopping off something that could be something very valuable. And sometimes people do that because they move too quickly. and they don't actually take the time to really go, what is the true value of this branch here, and what can they bring, and where can we use them? They move too quickly and they just chop, and then they lose something that could have been very valuable to the organization. And there's been quite a few limbs that have been very valuable to the organization that we've kept growing, right? And some stuff that is like, you know what, we actually need to make a decision and cut that off because we want this part to grow rather than that. And those are the strategic choices, right?
And you can't really get those by self-implementing all the time.
No,
You need somebody.
you have to reflect because it's hard because you're in the mess of it, right? And you're trying to run the business, but you're trying to look at the people. But the question is, how objective are you, and have you thought through those? Because each people decision you make is, tens of thousands of dollars, right? But you have to make the right ones, and that can make all the difference. Right?
Look, I mean, to me, it sounds so much like a sports team.
Yep.
If you have the players implementing
Yep.
the EOS system, right, and you don't have a coach,
Yep.
there's always going to be these conflicts of interest within the people who are on the court, right?
Yep.
The people who
Yep.
are actually running the business.
Yep.
But you got to have somebody on the sideline, which is what you're doing, saying, look,
Yep.
I'm looking at this whole thing objectively, and here's what needs to happen.
Yep. And then we're looking at it through the same lens. So all of the there's 6 major buckets within EOS. When you strengthen those 6 key components, then everybody has the same tools and toolbox that we're working at it. I was just with a client this morning, it's a couple billion dollar business, and they're like, I'm talking to literally the person that does all of the strategic planning, and people are still going, we don't think we have a strategic plan. And it's going, yeah, it's not that you don't have a strategic plan, you do, but you actually don't have a system that actually pushes it out and does the work for you. So then this person that's, EVP of strategic planning can't actually do that without the system, because the system has to reinforce that. Otherwise, she just gets burnt out,
And it's all in one person's mind.
Yeah, or a few.
Yeah.
It's usually up at the very top, and then the people just below that, they're not actually sure, because sometimes you're too much into the day-to-day, right? And talking to another EVP, this EVP is going, I don't know, what is our strategy? And it's like, oh my gosh, where have you been for the last 5 years? But that tells me that the system is missing.
Yeah.
So I was just talking to her about really, what is the system that helps reinforce that? What's that cadence every quarter, every year? And what do you do like clockwork so that you get your business running like a Swiss watch? And that's what EOS is supposed to do, is getting your business to run like a Swiss watch so that you can actually step out of the business and just be an owner rather than be involved with it, right? And that's kind of where the business is at. Quan and his other business partner, they're getting involved, but they're value adding and they're actually expanding, right?
Because the
But
foundation's already
the
there.
foundation's already there, but they're not having to do major repairs, right? But the key thing is for EOS, we have EOS, which is for the business, and then we have the EOS life. And when your business is running like a Swiss watch, and you can live the EOS life, which means that 5 things: you're doing what you love, you're working with the people that you love, you're having making a huge impact on the world, you're getting compensated appropriately, and 5thly, you have time to do the things that you love. And the purpose of EOS is so that business owners and leaders can live the EOS life. And I was just talking to another former EOS person that's self-implementing. Now it's like, how do you get out of that so that he can actually make an even larger contribution in his next season? At 55, he's like, here's kind of the calling on his life, but he's super successful with his business. Now it's going, how does he build out this other piece that's part of his legacy, that's like burning in his heart, and he can't wait to get it out?
It's beautiful.
Yeah.
Awesome.
Yeah.
Well, guys, thank you so much for your time today, sitting down, and I look forward to talking to you again when Quan has made Elite Mechanical an even larger success.
Yeah.
Oh, thank you.
Phase
Thank
2.
you.